Like, I'm not even going to do the most today, you know. I'm just going to sit right here and just talk to you guys. So like, we already know that we have NFP coming up, right? And we're going to be careful, you know, as much as we can trading it on Friday. But you know, as usual, I would like to go on and on and on about how Nasdaq is always respecting my setups and all of that stuff. But in this video, you know, we're not going to be talking about that. I want you to just see the trades running over here. You see, we had the 2 sales on Nasdaq. I just want to brag about how it just, you know, tapped on exactly the limit that I called out, right? I gave a selling limit in the group, as you can see over here, and then it just tapped on the limit and then just moved a little bit, right? You know, a little tiny little bit, as you can see over here, and then it just started dropping, right? So I'm super proud of myself just because of this sniper entry. You know, it's not all the time in the market that you're going to get, you know, this kind of sniper entries, and then it just dropped. You know, these are the zero drawdown type of trades, right? So I'm actually super excited. And then we never then caught the buy going up to the top, but then a lot of guys in the group, in the free signal group too, they were sending me screenshots of how they took the buy just using the weekly analysis setup, and it was just so beautiful, right? So I'm just so happy that, you know, it's not just helping me and my team, you know, it's helping a lot of other traders out. I'm so glad that a lot of people are taking the weekly analysis seriously, and then, you know, practicing all the strategies that I'm giving out there, and then actually making money, that I have tangible results of tons of people that are not even in my mentorship group that are actually just making money by watching YouTube videos, right? All right, so enough of dwelling on the weekly analysis. I mean, though it was good, you know, but then, you know, in this video, I'm going to show you a simple way to trade NFP or any other news event. In fact, you can use this method to trade anytime in general, right? But before we do all of that good stuff, if you're new to the channel, welcome. We trade Nasdaq over here. If you're returning, welcome back. You already know what's up. Don't forget to hit the like button, turn your post notifications, and subscribe to the channel. Why? Because when we hit 10,000 subscribers, we're already at 7,000 though, and I'm super happy, super excited. I'm going to be doing a little giveaway at 10,000 subscribers, you know, funding 10 different accounts and giving 10 different people free mentorship, right? You don't want to miss that. So now let's just get started with this video. No matter how many techniques you learn, there are only 4 ways to enter a trade. Well, that's in my own opinion, right? So we're going to have the institutional zone. We're going to have the bank zones, right? We're going to have breakouts. We're going to have pullbacks. Now listen, we have already spoken about the institutional zones. We have spoken about the bank zones. We've spoken about breakouts, but we have not spoken about pullbacks, right? And these are very important. And the trade that we actually caught on Nasdaq, right, was actually a pullback trade. And then now I know a lot of people will be like, how do you know when to trade a pullback? That is what you're going to learn in this particular video. The things to first understand, what is a pullback? So as we already know, we've been on an uptrend on Nasdaq, right? And then all those selling positions that you see traders putting, or when I take in a selling position, that is a little pullback, right? So these are the examples. As you can see, we're on an uptrend, and these zones that I'm marking over here, these are the pullbacks, right? And when we're on a downtrend, these zones over here are the pullback zone. So now you need to understand the reason why it is important to trade at these specific levels that I'm always mentioning, right? So if you're trading at a pullback, right, it gives you a better opportunity to get a good entry point with a better risk to reward ratio. Like, you're not risking a lot because it's at a zone where it's either going to be a sniper entry and then just moves in your direction, or it's going to have a little bit of a drawdown. That is the advantage of trading at these specific zones that I'm always mentioning. Now, one thing you need to understand, you can never be able to look at a chart like this, right, and then know that, no, I know this pullback is going to end at this exact zone. That is why we now have things like, you know, the Fibonacci retracement and stuff like that, where it will tell you where the market has potential to retrace to, and then, you know, it then goes in the direction that you're anticipating, right? That's why I don't like when, you know, a person says that at a 50% Fibonacci level, you should buy or you should sell. It's a potential zone, right? It doesn't mean that it's compulsory for the market to do that. At the end of the day, you should understand that the market is always going to do what the market wants to do, right? Now we're going to discuss how to know the potential places where the market can pull back to. We don't know 100% that it's going to pull back to this particular zone, but the probability of it pulling back to that zone in relation to the trend that we will be in is going to always be higher, right? So the first one that we can use, looking at our chart over here, we have a previous resistance zone over here that was broken and was turned into a support zone, right? So you're saying that the market has a potential potential to retrace to the new support that it has just formed. And obviously the second will just be that in vice versa, right? Previous support that was broken and has now turned into a resistance zone, right? So you're saying that you're expecting the market to get to that zone and then pull back and continue with the trend. So obviously we'll then have, the trend lines when the market reaches a trend line and then moves or breaks out. We have all of those Fibonacci, like I did mention earlier, but then the two main ones that I want is those support and resistance broken and turned into the opposite thing. So now you have an idea of where the price has potential of getting to. You now need to know where to enter, or do you wait for a confirmation candle? Do you wait for, because I have seen a lot of traders waiting for confirmation and then they are left by the trade, right? They'll try and go in and it has already moved probably with a very large candle, and then still, even after waiting for that, rejection or that pullback, they still enter with a really high risk to reward ratio trade, right? To be honest here, there is not a right or a wrong answer that I can say. You should wait for confirmation. You should just go in, because the account that you're trading, the risk to reward ratio that you have for the account. You might be a high risk trader. You might be a conservative trader. You might be a low risk trader. So it now all depends on your trading style as a particular trader. Now, this is the most important part. How then do you find high probability retracement or high probability pullback zones, right? You don't just go into any pullback that you're seeing on the market, and then just trade any single pullback that you see, right? Now, to simply find high probability pullbacks or retracement, you need to look for something called convergence, right? Or as a lot of traders will like to call it, confluence, right? So what is confluence? So in simple terms, we can just say this is a point where two or more trading tools that you have come together, and give the exact same signal, right? As an example, you can have price at a previous resistance and it's now turned into support. That's the first thing. And then we also have price at a major resistance, on a larger time frame. That's the second thing that we can consider. And lastly, we can consider the fact that we have a bearish pin bar candlestick at that particular zone, right? Notice these three things all happening at the exact same time, right? I'm going to look at that zone and then I'm looking at it like, no, this is a really good and a high probability pullback or a high probability resistance zone, and I can take advantage of this type of setup. So I like to use trades that I've taken before as practical examples, right? So we can see on our Nasdaq, right? We had the price breaking this certain trend line that we had over here, and then we had the price coming back to this exact same zone, right, as a pullback. So the first thing is it has already broken out of the trend line, and then it's coming back to retest the trend line, and then at the zone that there is a bank zone, and then also it is at a resistance that was broken and turned into a support level, right? So when I just see all of these things coming together at the same time, right, and I'm on a good time frame, and then probably it's also during the New York session, I'm going to not hesitate and just take the trade, and ride it up to the top, right? So that's basically how you can identify high probability pullbacks or resistance zones. One person might say that, it doesn't make sense to only wait for a perfect setup, like wait for all of those things to happen. Well, I mean, it does make sense to take one good trade and make actual, profits than taking 10 bad trades, losing, 7 of those trades and then just winning 3. At the end of the day, you're going to end up in drawdown, right? I'm not suggesting that you wait for all the things that you've ever learned in forex to happen on one certain spot for you to then enter the trade. But if you have 2 or more, confirmations, you can then simply don't hesitate and enter the trade. It will be a good trade, right? Linking that to the NFP that we have coming up, right? So normally when you're trading NFP, you notice we have a little, sharp move at the beginning, right? And then it just kind of like retraces a little bit. That retracement is what you can catch. So you want to wait for it to spike. If you don't know the direction of NFP according to the fundamentals, if you don't know how to read news, I always suggest that you wait for the market to spike, right? You leave the spike first, and you want to catch the second retracement, right? So when the news is released, right, and then it gets to a certain level, the first spike takes the market to a certain level, right? That's the zone that you're now interested in looking at what the market might do at that particular zone, right? So that's simply how you can just utilize the information that you learned today to then trade NFP on Friday, right? But if you did enjoy that video, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'm out. Peace.